Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Let's start with a recap of yesterday. Basically, there was the data, there were a few data points, and of course there was Powell's press conference. So there were a few elements at play. But as we mentioned yesterday morning, we weren't expecting any major moves in response to these data releases. The market, as I already mentioned a few weeks ago, is starting to detach itself a bit from the data. So it's no longer a data-driven market as it was in the past up until a few months ago, when the data, let's say, always triggered major movements. Instead, we've entered a phase that's a bit more resilient to the being release of this data, and the market is now paying more attention to other variables such as those coming from the news. So it's become a more news-driven market. In fact, in recent days, then the pace of this de-escalation has increased, and the market is adjusting a bit with a drop in volatility. Basically, everything is settling towards a kind of normality. What, as I've been repeating for a few days now, continues to cause some concern is the yield on US bonds, which is moving at quite a brisk pace and is getting close to, levels of, let's say, in the range of 0.5 seconds. So we need to be ready, and we need to monitor this situation very carefully. That said, from a technical or, let's say, operational point of view, there aren't any important data releases today, so it should potentially be a day that passes by without any major jolts, unless of course some statements or about tariffs or some new element comes into play in the market. As for the Nasdaq, yesterday, as we were saying, there was a bit of sideways movement. Then there was first a break to the downside and attempt to break out downward, so a move out of the range we had indicated, but it quickly came back in. There was a bit of up and down during the opening phases, but then once the hesitation was broken, the market started rising again, broke out of the range on the upside, only to fall back inside it. So basically, it was a day that didn't really tell us anything. We're more or less where we were before, so we're back inside this range. Everything remains unchanged, and that's it for now. Basically, these are the extreme levels, but within these we can draw another, let's say, sub-range between 21,070 and 21,290, so roughly between 280 and 290, more or less, between RD0 and SD0. So nice. Let's keep an eye on this area, because I think we could potentially be trading within this range for the whole day. Remember that today is Friday, so protect your psychological and above all your financial capital. Today is not the day to go all in, so be extra cautious. I always remind you of this on Fridays, because people often get tired and can make mistakes. Let's move on to ES, which is basically in an even more obvious and mirrored situation. In short, we're exactly within the range, not a range. That's forming above the previous one, because after the breakout, unlike the Nasdaq, it hasn't come back in, as you can see. So we can basically identify a nice precise range between RD0 and SD0, which absolutely needs to be monitored. A return into the previous range could obviously bring prices back to retest the area of the previous range lows, so around the 5,090 area. At the same time, a breakout above the RD0 level, so 5,945, could trigger strong bullish moves, possibly even testing the 6,000 area. Why not? This is the situation for ES. Let's obviously move on to the other two American futures, starting with the Dow Jones. Yesterday it made quite a move. It went even lower really nicely, testing the level we had indicated with the gap closure. So absolutely spot on. It was a great swing entry point for a long position, which then brought prices back up to the highs. At the moment, we're working around the highs, this area here, which we had somewhat excluded from the range. So RD0 and SD0 absolutely remain valid for the Dow Jones. The area to watch is a breakout above RD0, which could easily bring prices up to the 43,000 area, which should more or less correspond to today's VIX area. On the downside, of course, we're monitoring SSDO as the first obstacle, but also SD1, since it represents the 42,200 area. So that's the area to watch between SD0 and SD1 on the downside. Let's move on to the Russell, which has fortunately recovered the 2100 level. It's currently working around that area, just sitting slightly above it, so it's more or less like yes, just like with the Dow Jones. We absolutely need to monitor SD1, RD1 and SD1. So this is the area to keep an eye on. A break of SD1 could easily push prices into the VIX area on the upside. We can absolutely say with a good degree of probability that a break of the RD1 area could easily bring prices back to the maximum area. So to test 2,135, 2,140. Let's look at the DAX, which keeps shooting up. All the European indices are continuing to move within nice, strong upward channels. So let's say that we only follow the DAX, but also the stocks, the FIB for Italy. In short, they're all moving up quickly. The DAX had, let's say, basically moved out of this very nice and well-formed ascending channel with this sideways movement, but then yesterday it clearly moved back in. The markets have been open for about 20 minutes, and as you can see, they're already moving quickly towards RD2. They lingered a bit here on RD1 before starting to rise, though, so we definitely need to monitor this RD1 area because it could be a good buy opportunity, or I don't know, a break below could bring prices back to test on the HV area, or even possibly on an SSD0. But honestly, given how the market is set up right now, I think there's a good chance we'll see a test of the 23,900, 24,000 area. The DAX is very strong, so it could go for a double top at these highs that were recorded at the beginning of the week. Let's also take a look at oil, of course. Today there was a contract rollover, as we mentioned yesterday. There was a bit of volatility. This is the rollover gap. For now it's moved a bit within the range of yesterday's BC3, so we definitely need to monitor the downside in the area of 60.80, 60.50, 60.80, which absolutely needs to hold. A break below this area could easily bring prices down to the 59.50 area. On the upside, the area is clearly defined, 61.80, 62. This is the area to watch. A break above this level could easily bring the price back to retest this whole area of lows around 63. Let's look at gold, because I need to make a correction. Yesterday I showed you a chart. I'll show it to you again now on VH1. Basically, I showed you this wave here, which had a target of 3,055. In reality, I had drawn it starting from this high here, but I made the mistake of not considering this gap, so it should have started from here. So taking it from here, obviously yesterday we reached the lows of this third wave. There was a pullback to retest the area from which more or less the move had started. It's retesting it now, and I've drawn a fourth wave, which, if it plays out, could bring the price to the 3016 area. So as usual, this is still the regular chart. Let me remove this for you. This is what I showed you yesterday without this fourth wave. 1, 2, 3, which gave a target of 3.055. But I made a mistake because I started the projection of the fourth wave from this high here. But actually, this wasn't the high it started from. The last high was actually this one here. So I copied the wave. Again, here it is. If I position it starting from there, you can see how yesterday we more or less touched that area. So the wave was completed. There was a pullback, and now it seems to be forming a new fourth wave, which would have a peak a bit lower at 3,000, 3,015 compared to the previous 3,118. So that's a difference of about 100 to 110 points. Therefore, the situation is absolutely valid and worth monitoring. Let's try to take a look. So these are the levels that we will be monitoring. I showed them on the H1 chart, so to the upside. We are going to monitor this area here, so a break of 3,270 could bring prices back up to retest this area. Obviously, if this area holds, it could push prices back down to test the lows recorded yesterday and then possibly complete the wave. Let's move on to, well, SPX, which also remains above this nice flag that's been drawn, then broken, retested from above once, and even a second time a bit deeper, and then it took off again. So if this pattern continues, we'll probably complete this fourth wave today, which we've pointed out several times has a target area of 50,900, 55.60. Okay, to the downside, obviously, basically a break below this level here from yesterday, which was 58.70, 58.60. Basically, this is the area to watch on the downside. Let's obviously also look at Bitcoin, which yesterday did a nice test of the lowest levels. I pointed them out in the chat as well. It landed exactly at the minimum, right on the tick, and then bounced back really well. So at the moment, it's working, and it's already going to test RD1, so there's a good upward momentum. Holding HV at this moment seems fundamental to me from the support at HV and SD1. It could give way to attacks toward the VIX area, so 105 on 100, 105, 800, 106. On the downside, of course, we'll be monitoring SD1, which seems to me to be the most significant level. As for the dollar, well, here both the euro and the dollar have strengthened a bit, as we already pointed out yesterday morning. Then, during the day yesterday, it moved sideways a bit and is still hovering roughly around the 112 area, which seems to be finding resistance to breaking higher for moves above 113. On the flip side, of course, dollar yen is also losing strength. The dollar is weakening even against the yen. Yesterday we pointed out this double bottom, which was then broken, and basically a new downward wave started, taking prices from 145.50 down to the lows of around 144, 144.90, 144.95, which correspond to these lows here from which this surge then started. So this is definitely a level to watch, because it could also end up forming a bearish head and shoulders pattern with the right shoulder, head, and the left shoulder higher than the right. In other words, the right shoulder higher than the left, and the neckline drawn right in this area here, whose break could project a move from 148 to 145, so 3 figures, and from 145 it could take prices down to 142. Okay, we've obviously reached the end of this daily analysis. As always, I invite you to follow me on social media, leave a like on the video, and we'll catch up later in the chat. Thank you all for your attention.